Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be talking about Activision Blizzard and the recent news that Microsoft was going to acquire them. So I actually, about a week ago, I recorded a video that was just going to be a stock analysis on Activision Blizzard, and then a few days later this all was announced, and so I was like, well, shoot, a lot of the stuff I talked about in this video doesn't really matter anymore. I talked about valuation for like 5 or 10 minutes, and obviously the valuation doesn't really matter because we know the valuation. Microsoft is buying them for a certain amount of money, which is basically the valuation. But I did talk about some other things like their earnings and their balance sheet and some stuff like that, which although it won't be its own company for that much longer, and it's not going to be on the stock market, those metrics are still pretty important because, if those metrics are not good, if the balance sheet is not good, if the earnings are not good, then that's not going to be good for Microsoft. So I'm going to include that portion of the video, and then I'm also in the second half just going to talk some about the actual deal and what that means for Microsoft shareholders and what that means for Activision Blizzard shareholders. Their basic financial metrics for the third quarter 2021. We're looking at those third quarter results that were released at the beginning of November. So they had about $2.07 billion in revenues for that quarter, which was about $100 million higher than the $1.954 billion that they received in 2020, the third quarter. And EPS was about 82 cents for the third quarter, which was up from 78 cents in the third quarter of 2020. And their operating cash flow for the quarter was $521 million, which was compared to $196 million for the third quarter of 2020. So that's significantly higher, which is good to see. And they also say that their overall Activision Blizzard monthly active users was 390 million. So basically 390 million people are using their products and services every month, which seems like a lot to me. And this is where they kind of talk about their individual games. So they obviously have Call of Duty, and then they have this Tony Hawk skater game. They have Warzone, and then they have different versions of Call of Duty, I guess. They have a mobile game. They have something new called Vanguard. I don't know much about that. And then within the Blizzard segment, they have World of Warcraft, which is super popular, and this Diablo game. I haven't really heard of that much, but they seem to talk about it a lot. And then they also have Hearthstone, which I've definitely heard of before. And then the King segment, that's more of like mobile game stuff. So they have like Candy Crush and Farm Heroes, which those were definitely really popular a long time ago, like 5-10 years ago, but I think they're pretty popular. It says in-game net bookings for Candy Crush grew over 20% year over year, and it said Candy Crush once again was the top grossing game franchise in the US app stores. So obviously it's still kicking, Candy Crush. And the thing with this King segment is most of their revenues are probably going to be for in-app purchases and advertising. So these games like Candy Crush and Farm Heroes, you just download them on your phone and they're free to play, but you can buy upgrades, you can buy stuff, and there's ads as well, so they get paid for that. So that's an interesting sort of method of making money that's different. And a lot of these other games I think also have in-app purchases, I would guess, or in-game purchases, but a lot of them you also have to pay to actually buy the game. So those two types of payments or revenue streams from these types of games like Call of Duty, where you sort of pay to buy the game, and then a lot of people are probably spending money within the game as well. So that's pretty cool that they have those different types of revenue streams. And we're also going to go down here to look at the balance sheet real quick, and we can see, I think I went too far, that their current assets are sitting around $11.2 billion, which is up a little bit from last year or the end of 2020, where it was around $10.6 billion. So that cash has increased by about $1 billion. So most of that increase was due to the cash and cash equivalents, little segment there. And then total assets are sitting right around 24 billion, which is up close to 900 million from last year. And current liabilities are only $1.02 billion, which is down about $1 billion from last year and significantly lower than total current assets. So that's good to see that they have a very healthy current ratio, and especially from, it's definitely not a newer company, but a company that's, in the software segment, gaming, something like that. A lot of those companies are probably don't have the best current ratios as well, like that. They probably aren't just as well off financially, I would say, because from looking at this balance sheet, it looks very solid, and total liabilities are only $7 billion, which is pretty astonishing considering they have about almost $10 billion of cash. And one thing I noticed earlier when I was looking at the company is that their cash is more than their total debt. So they really have zero net debt. So their total long-term debt is $3.6 billion. And they don't say anything here about short-term debt. So we'll just say, even if they do have some sort of short-term debt that they don't list, if debt is around $4 billion, $3.6 billion, and their total cash is $9.7 billion, that essentially means they could pay off all their debt right now and have zero debt and be fine. So that's something that is super attractive to me. Obviously, a lot of companies use debt to grow their business, and so that is important. But at the same time, it is important to be at a safe level, and having all that cash to be able to pay off that debt indicates that they really are at a really safe level. So now we're going to talk about the actual deal, and we're here on Microsoft's website where they basically have the press release, and these are some of Activision Blizzard's games that they own or that fall under their company. They have Overwatch, Diablo, Call of Duty, World of Warcraft, Candy Crush, and StarCraft. And that, when I was going through and sort of making that Activision Blizzard video initially, that surprised me. I didn't realize that they owned all of King, which obviously made Candy Crush, and they have some other mobile games that are pretty popular as well, I think. So I think that's pretty cool. This was announced on January 18th. So they said that Microsoft announced plans to acquire Activision Blizzard, a leader in the game development and interactive entertainment content publisher. This acquisition will accelerate the growth in Microsoft's gaming business across mobile, PC, console, and cloud, and will provide building blocks for the metaverse, which is a big thing these days. And Facebook has kind of turned their business into Meta, which is supposed to be more focused on the metaverse, I guess. So that's kind of a big play by Microsoft to specifically name that and kind of throw it in Facebook's face, I think. But it says Microsoft will acquire Activision Blizzard for $95 per share, which is valued at $68.7 billion. So I think that is pretty cool, and obviously I'm not going to include it in the video, but when I talked about the valuation, Activision Blizzard was trading in like the $65 range, and I was basically saying it was undervalued, and its fair value is probably closer to $100 per share. So I think it's pretty cool that they bought it for $95 per share, which is pretty close to what I was kind of thinking was the fair value of Activision Blizzard. But the CEO of Activision Blizzard, Bobby Kotick, he's still going to be the CEO, and their business is basically going to report to Phil Spencer, who is the CEO of Microsoft Gaming. So they're kind of within that Microsoft Gaming segment, and the deal actually still has to be approved by Activision Blizzard's shareholders. So that's definitely a process that they have to go through, and I would think they would probably get approved because Microsoft will probably just give them a lot more avenues to actually be able to, distribute their content and games through, and kind of just make it easier to sell their products and services to people all around the world. And they also talked about basically trying to develop with Microsoft some mobile games of their popular games. So it says mobile is the largest segment in gaming, with nearly 95% of all players globally enjoying games on mobile. Through great teams and great technology, Microsoft and Activision Blizzard will empower players to enjoy the most immersive franchises like Halo and Warcraft virtually anywhere they want. So I think that's pretty interesting that they're kind of do that as well. So that's definitely a benefit for Activision Blizzard. And so I don't see any reason why it shouldn't be approved, but it's expected to close in the fiscal year 2023, so not really for a whole nother year, but probably sometime within the next 2 years that'll go through. And it's pretty interesting to look at Activision Blizzard stock, because you can pretty much see right when it was announced basically they went up to about the fair value. So they went up to like $86 per share. And it's kind of interesting. Right now they're actually trading a little bit below the fair value, but I think that might be because of some of the cash on Activision Blizzard's balance sheet. I think that is kind of factored into the cost, if that makes sense. But overall, I think it's pretty interesting that Microsoft made this move. I was talking to Jerry the other day on my live stream, and he said something like he thinks it's just like interesting that something's happening, because a lot of these big tech companies, or a lot of the biggest companies, in the world that are on top of the S&P 500, they have so much cash, and they haven't really been doing anything with it. So it's good to see Microsoft putting their cash to work. Apple has like $200 billion of cash, and they don't seem to want to buy anyone or do much with that cash. So I think it's pretty good for Microsoft shareholders to see them put some of that cash to work, and actually be able to add some more business to their company and accelerate their progress in the gaming and sort of entertainment industries, even, because gaming is kind of like a form of entertainment. So let me know what you guys think of this deal in the comments down below. If you do own Activision Blizzard stock, I hope this works out well for you, and you make some money on the deal. And I just want to thank you guys for sticking around to the end of the video. I will see you in the next one.